IGTV, and this is your special look ahead to Thursday, the 18th of January. Now, we start off in Australia, where we have unemployment numbers. This is the unemployment rate expectations for December, 3.9%. Australia still seeing a very resilient labour market there, and we are monitoring that to see what its central bank does going forward, especially with all this chatter about this expected US rate cut sometime in March, although those expectations are being weighed by that hotter than expected retail sales data that we've just seen in this session. Next on the diary, we've got housing starts and building permits out of the US. Initial jobless claims will be interesting as well, given we had that stronger than expected US retail sales number. And EIA crude oil inventories will be interesting too, given oil prices, oil futures fell this session after weak or perceived relatively weak Chinese data and also a strengthening dollar. Let's just have a look at the dollar basket here to show you what happened this session after that retail sales figure. We did see a slight strengthening there of the dollar. It was 10.309 prior to that US retail sales figure. It's now 10.316, come off a bit now after a higher spike. Certainly, indeed, US stocks are indicated lower than before. That US data on retail sales was revealed. The concern now is that perhaps all the strong data out of the US might have the Fed dialing back or rowing back on some of the rate cuts that markets have been anticipating as soon as March. Moving swiftly on, we also have numbers out of the UK. This is Currys. Currys is out with its Christmas trading statement. Currys is a really interesting one because it sits in a unique space in the UK market. The grocers, as you know, have done well in the Christmas trading period, especially in the food side of things, but it's general merchandise that has been quite weak, and many investors looking out for indications of strength there before diving into the sector. Certainly Currys, which sells electronics, is sticking to its financial guidance as of December 14th after it reported a first half loss in line with last year. But said its balance sheet and liquidity had strengthened. However, like many of the retailers, Currys is no different. It has come off the highs seen since the pandemic, when many people were rushing out to get computers and all manner of electronics for their home office. And we also have this retail theme continuing with Dunelm. Just showing you the chart because there's a lot of volatility in this chart. Let's have a look there. As you can see there, it's been trading in this range since March 2023. And if I zoom in a bit further, you can see that there's a down channel progressing right now since around December 2023. If it breaks out of this 1038 level, then perhaps we could see it push back with enough momentum to the 1,100 point. But Dunelm is a really fascinating one, as well as it sells all manner of homeware to the slightly cheaper end of the market. And as we've seen in bad times and cost of living crisis continuing, sometimes it's better to be on the premium end than on the cheaper end. And so that is your look ahead to Thursday, the 18th of January. But of course, all this talk about when the Fed might cut interest rates likely to continue driving the market as we look to more clues in terms of data out of the US. For more analysis, do follow me on @Angeline Ong on Twitter, or you can find me on @IGCom as well. This is IGTV.